The market is going to start trading in about 50 seconds or so. The Nifty is up about 13. The Sensex is up 41. So you've got, the start coming up very quickly. Keep an eye out on a few stocks. I'm going to highlight names like Glenmark. Glenmark has seen some pretty large selling recently. Yesterday also was down. That is up 3% in the pre-open. Could do more. Let's keep an eye on the space. Dr. Reddy's numbers are very strong, so it'll be interesting to see if the stock is going to react to numbers, or I think the FDA issues will weigh because of one of its plants. So I think that's the other thing. Then you got Nestle. Numbers are poor. I mean, forget Maggi, but even without Maggi, sales for the rest of the portfolio is down close to about 10% or so. So those are the three names straight up. 40 points on the Sensex, about 13 points on the Nifty is what you have. Dr. Reddy's is up 1%. Stock's at a high, by the way. Remember, very close to a high. 42.50 is where the stock is. ICICI Bank is up 0.5%. Dr. Glenmark is up 3%. Okay, so that's 974 or so on Glenmark. ICICI Bank is up 0.4%. PNB is up 0.12%. Nestle is down 1.5%. Nestle is already, I think, down about 1,000 odd rupees from its highs. So that is lower. Emami reported numbers. Stocks down about 4.6%, 4.7%. There are many others as well which reported earnings, and maybe we could quickly look at those as well. So let's do that. MRPL, we can quickly wind down these numbers. MRPL Q2, there were losses. You've got ONGC, which is down 2%. HCC reported earnings. Numbers were, admittedly on the face of it, strong. MRPL is down 10, by the way, 10%. HCC will come up 3.25. There you go. GIC Housing reported earnings. So that's profit up about 15-16%. Stocks up 2. BEL, that's Bharat Electronics, 2% higher. That's 12.43. Crompton reported earnings. Crompton is up about 0.5% or so, 181. These are all result reactions. We should have them up at the bottom there. SL Propack reported earnings. Numbers are in line. Heidelberg Cement reported earnings. Again, steady numbers. Profits are up 36%. I guess these numbers are, but against what was expected, numbers are in line. Alstom T&D reported earnings, and Alstom has seen margins expanding about 3.5% higher on that one. That's 18 odd points on 18 odd rupees on Alstom right now. So this is the result reaction that you're seeing coming up. Thomas Cook is down about 3.75%. That's about 200 rupees on that name. Power Grid about 0.75% higher. Grasim is up 1%. Bajaj is up flat, actually, nothing large there. Eros Media is down 7.5%. Bosch is down 0.5%. You've got SBT, that's State Bank of Travancore, 7.75% higher. Emami, Praj, JM. Why don't we just rewind, look at a couple of names. Let's start with Just Dial if we can. The stock saw a big sell-off yesterday. It was down almost 11%. And Just Dial is up about 1.33%. That's 867 on Just Dial. Let's look at Glenmark once again. Let's look at Dr. Reddy's once again. And let's look at Nestle once again. And then I'll go a day back and look at Axis Lupin as well. So Glenmark is up 4%, so it's moved up even still from the opening levels. DRL is still up about 1.25%. The numbers seem to be playing out. Not so much the plant FDA issues. Axis Bank is up 0.5%. Okay, Axis was weak yesterday as well after day before yesterday's big cut. Lupin is not seeing any, bids at this point. In 1918 odd is where Lupin is right now. Let's look at TVS if we can and see what's happening there. Thermax, I'd like to look at Thermax as well because Thermax sold off as well, by the way, by 5% odd. Numbers came day before yesterday post-close. So I think that would be interesting to note as well. About 1.25 on Thermax. That's about 859, 860-ish is where that name is right now. All right. So that's the earnings from, yesterday, today, day before yesterday. Just some of the most active names which have moved around quite a bit coming up on your screen. 4 odd points as well is how much the Nifty has on it now. It's flat. 13, 14 points on the Sensex. 26,850. I'm being told that Eros is down another 7%. So we could take a quick look at that as well. All right, let's get our market guests in. We've got K. Subramaniam joining us from our studios here. Lancelot D'Cunha is going to be with us as well in just a bit. Subramaniam, thanks very much for your time. Good to have you here. What do you think will happen to the entire F&O market because of the lot size increase? What's your assessment?
So basically, I think we have to look at it in the perspective of the volumes, and we have got three major participants. You have got the FIS, you have the institutions, you have the proprietary trades, and also the retail side. So as far as the, I think the heavy segments are concerned, I think I don't think that should much of a problem. But as far as the retail segment goes, I think there we are definitely going to see some tepid response, at least for the initial part of the series, when the options are normally trading higher, and you will have the trading in that particular segment definitely looking a little weak. But in the second half, I think second half of the series, when the options become relatively cheaper, I think probably you will have some increased participation from the retail. But this definitely puts a bit of dampener for the retail side of the market, and we'll have to wait and watch how exactly things pan out. But to begin with, definitely a tentative start could be expected.
I mean, the arbitrage volumes could also come off, you think?
Well, as far as arbitrage volumes is concerned, I think yeah, initially it may have some impact, but I don't think it will have such a huge impact as much as the option side, because the option writers are the ones who are waiting for the option buyers. And if the option buyers are on the sidelines and they are not able to participate because of the high lot size, I think that, and because let us not forget that already options face a heavy liquidity issue in India. So once we have this situation of where the writers are ready to write, but you don't have the buyers, ready buyers coming about, then obviously the spreads become quite large, and the things just don't look worthwhile for the retail people to participate. So I think that should be more of a bother. But as far as arbitrage is concerned, I think more or less I think that should be not much of a problem.
In a way, right? I mean, does trading in the future segment get harder? Because I mean, if we assume that a lot of the retail gets discouraged and trading there from other retail investors goes down quite a bit, and what is left in the market is HNIs and institutions and better informed participants, basically, right? I mean, then you're competing against relatively the more informed crowd, right? I mean, if you are a retail participant in the market, I mean,
exactly,
it gets harder.
Because of the lot size, things can become a bit unknowing, because, I mean, considering some of the lot size which have jumped considerably, obviously placing bets in this market for a retail investor becomes extremely difficult. And
not just because of the size, or he's got to put up more money or face the risk of more loss if the bets go wrong, but also because generally the game gets tougher, right?
Games definitely, because the margin intake is much higher, and obviously beyond a point, he cannot take forward the bets, and that's where it really starts hurting. And we'll have to see how exactly things pan out, and definitely retail is going to be the space which is going to be badly affected because of these changes.
Lancelot is with us as well. He's with me here in our studios. Lancelot, good morning. Good to have you here. Your thoughts on this F&O thing, 2.5 times increase?
I think it definitely increases the risk for a retail investor because of the higher exposure, and probably you will see some drop in terms of the volumes, because smaller investors will move out of trying to trade on the market. But in a little longer term sense, it is good for maybe investors who can be focused on investment rather than trying to do trades when they are not really capable of absorbing that kind of risk. So I think it's a good thing, because it will eliminate the people who are not capable of absorbing the risk, and they can move into maybe investment.
You think that is the reason why this has been done, Lancelot?
I think that
to discourage retail?
Yes, I think if you look at the various measures that SEBI has taken from time to time, it is to have a higher limit for people who can invest larger amounts, because they would then be better informed, and the risk-taking ability of a larger ticket size, persons would be a lot higher than risk-taking ability for smaller ticket sizes. So you can eliminate, the risk for smaller players, and then they can move into mutual funds or into other avenues where they are facing a little bit less risk.
Yeah. Let's just get to some numbers. By the way, Glenmark is up 4.5%, so it's basically recouped all of yesterday's losses. It's still way off from where it was even a fortnight back, but it's come up quite nicely, 43, 44 rupees. Dr. Reddy's, I think, is still higher, so there's that. And Nestle, I think, is still off. Some of the names are there at the bottom of the screen, so nothing dramatic as of now seen. Lancelot, what did you make of the, just some of the numbers, I mean, if you have any thoughts, Nestle, Glenmark, DRL?
Well, I think Glenmark and Dr. Reddy's did come out with good numbers. Dr. Reddy's did better business in the US, and that helped the numbers. So from a pharma pack, we saw some disappointment from Lupin, again because it didn't have much traction in the US, but and that was something that was there even in the previous quarter. So we are seeing that prolong for the next quarter as well. I think as far as the other results are concerned, we've seen a mixed bag, because what has been noticed is that there's not much of volume growth. So people who have managed to, or companies which have managed to keep costs low, have improved their EBITDA margins. But
everybody
volume
seems
growth,
to be doing that, right? I mean, everybody's doing a great job at keeping costs low.
Yeah. So I think that's the focus at this point in time, to grow profits, because there isn't that much of volume growth from the economy. So it is a cause for concern.
Yeah. I mean, so any result has made you sell a stock or buy a name?
Well, it's difficult to say whether I can't say really what I've sold and bought, because that's for the client's account. But I think based on results, you have looked at various re-rating, and
so Axis Bank, any change in view?
No, I think Axis Bank,
did you own the name?
No, it was not owned by us, and it has always been. It was expected that the valuations had moved up pretty sharply over the last couple of months.
ICICI reports, I mean, I'm sure you own ICICI.
Yeah, so...
I mean, I think it'll be interesting to note. Just Dial, any thoughts, Lancelot?
Well, Just Dial, has seen weakness this quarter, but it was always a difficult call to take, because valuations had gone extremely high. So I think we are seeing some amount of reality seep in back into valuations for Just Dial, and that should probably be good for for investors who want to look at the stock from a longer term perspective. And their business model will evolve slowly.
Yeah, but the point is the Just Dial is half of what the price, less than half of where it was, right? I mean, at the high levels, at the peak levels. And in any other industry, you'd start to think, well, okay, this is a good level, the price, long-term P, this, that, the other. But the point is, for something like a Just Dial, I'm not saying it's winner takes all, but either you use the platform or you don't use the platform, right?
Right.
That's what I mean. So it's a bit of a blind spot there. And they said, we spoke to them, they said we're still mostly a search platform. We'll slowly evolve into a transaction platform. But 2 points there. One, it seems they're too late to become a transaction platform for everything. And if you just think about it, I mean, they're competing against essentially search engines like Google, right? And other specific apps and other specific websites as well, which offer category-wise options, more specialized, which maybe already are entrenched a little bit. So it doesn't see, I mean, you don't get a good feeling about this one, Just Dial.
Yeah, I would agree with you. I think, the space is a very difficult space to be in, because either you've got to be, as big as Google, where everybody then uses you for everything, or you've got to be very specialized. So you have, apps that are in the food space, that are in the discount space, in the shopping space. Now, what happens is that for a Just Dial to be in, either it has to be in all the spaces, in which case it's got to take over market share from somebody as big as Google, or it's got to be a niche player and creates its own niche, which at the moment seems to be between here, neither there. So I think unless they are able to create their own loyal customers who transact, and they add some value, where customers then start feeling that, okay, this is something which I can't do without, it's going to be very difficult for Just Dial in the long run. And things are changing very fast. I mean, a couple of years back, internet was the big thing. Now it's mobile internet that's becoming, the driving force behind transactions. And then we've seen now with payment banks and the small, payment apps coming in. So there's going to be a big change that's taking place, and I think Just Dial also has to face these changes.
Yeah. Subramaniam, any thoughts on what should one do now? I mean, Nifty first, and then we can talk about some specific trades.
Well, actually, right now the index is more or less on a no trade zone because I think somewhere the market participants have definitely sensed some sort of nervousness and probably some shorts were definitely initiated at higher levels of 82, 50. So I think currently I would be a bit tentative, and we have recommended a strangle, incidentally, that which involves a selling of 8,000 strike put and 8,300 strike call. So we're just waiting and watching and trying to capture some part of this premium. And currently, I think market looks a bit tentative, so I would rather wait and watch and implement this strategy and try to capture some of this premium.
Okay. Any specific trade, Subramaniam?
Well, again,
Stock-specific.
going by the roles that we have seen, some roles which are positively inclined, something like a Colgate, that has seen some pretty decent roles, and that could be a counter which could be expected to spike up. The second one that has seen some good roles is something like a Tech Mahindra. Now there again we have seen some pretty good roles, and in the last few days it has shown some sort of strength, and even the overall IT seems to have found the preference back, and we have seen some sort of buying in likes of an Infi and SCL Tech. And thirdly, something like an ONGC. Today of course it's a bit soft, but what we observed was that some of the shorts have not got rolled over. So maybe at a certain point, maybe the worst is over. So I think lower levels of maybe 240, one could consider buying something like an ONGC. And on the short side, of course, the heavyweights are holding the limelight, likes of L&T and ICICI, where we have seen some pretty aggressive shorts getting built in. But here again, I mean, today's results will hold the key, and I think large part of the expected disappointment, I think, is already built into this segment. And ICICI will be more vulnerable, and L&T, I think, broadly some sort of value picking will start around those 1400, 1425 levels. So I think these two counters have seen some pretty aggressive shorts, which will reside, where we could see some decisive short covering coming about at lower levels. And one more counter where we have seen some pretty aggressive shorts, something like an REC, where again we have seen some pretty aggressive shorts. So I think that's a counter which probably could categorize as a sell at a rise sort of trade. And currently I think it's again
sell on rise.
Sell on a rise.
Okay.
So broadly these three counters on the positive, on the negative side. So I think these are some of the highlights which we could pick up.
Which
from
was the first one?
Colgate.
Colgate. So Colgate and L&T to be bought?
No, Colgate, Tech Mahindra and ONGC.
Uh-huh.
And on the sell side, not exactly sell, where the shorts have been pretty aggressive. So we could see some short covering coming about, likes of an L&T, ICICI, of course, which will be decided today itself, and an REC which definitely looks sell for a rise. I think it's quoting at around 250. Maybe if you could expect a bounce of 260, 65, I think that could categorize as a good sell.
All right, fair enough. We'll leave it there, gentlemen. Thank you very much. Subramaniam, appreciate you joining in. Lancelot, good speaking with you. Short chat today. Have a good weekend. We'll see you back soon.